Hey, my name is Tucker Kraus and welcome to my channel. In today's video, we are going to be going over all the uranium companies that I've done a video analysis on and just combining them all into one video just because you could consider this a uranium stock comparison part 2.5, whatever it is, because I just want to mainly cover the discounted free cash flow, have them up against each other, especially because a lot of the prices have changed since I last did a lot of those analysis. So that's also a quick update to the valuation upside, and we can compare all their valuation upsides. So it's going to be a quick video. Let's dive right into it. And yes, sadly, now after this video, I'm going to be driving it to one video a week because of school, so I have to waste my time with that, but you know, that's not important. Now, smash that like button. I don't know if I said that already. Maybe did, maybe I didn't. Maybe it's happened twice. Let's get into the video.
Alright, so here we have just the companies that I've done a in-depth stock analysis on in the uranium space, ranked from highest to lowest market cap. We have Denison Mines, UEC, Fission Uranium, Global Atomic, UEX, GoviEx, and Forsys Metals. Now, you'll note we have a whole range of market caps here from 155 million up to 1.3 billion, though of course these are a lot higher than when I first made the video on some of these guys, so that's part of why I'm making this video. But we can see that only Denison and UEC trail the New York Stock Exchange, and the rest of these, if you want to buy in the US in US dollars, only on over-the-counter exchanges, though Fission said they're planning on getting a New York Stock Exchange list, so that should help with their volume, which is a good thing. Let's not waste too much time here. If you've seen the videos I made on these guys already, you already know a lot of this information. What's this? It looks like only 15% of you guys are actually subscribed who are watching this, so that's pretty crazy. If you are not currently subscribed, please subscribe for more stock analyses, especially in the uranium space. I don't think analysis is that the proper pearl? I don't know. Anyways, that's the advertisement. Please subscribe if you're not already, so that you can keep up to date with all my videos. So here we have their updated price per pound, and we can see GoviEx is still number one at 99 cents, though compared to what, 45 cents or so that it was before, that is still a significant increase, though it's still a lot lower than even a lot of these companies were before running up with SPUT. Keep in mind, when I do this price per pound, this is only taking the company's share of deposit and is not on a 100% basis. In second place, once again, we have Forsys Metals at $1.23 per pound. So these two, price per pound wise, still look really good. Though by the time we get to Global Atomic, they start to get pricey again, starting at $2.14. And by the time we hit Fission Uranium, quite expensive price per pound wise. So price per pound wise, with the exception of GoviEx and Forsys, doesn't look too good, at least relative to a month ago. It's substantially increased, which I'm not a fan of. I prefer like sub $1.50 for my price per pound. Now, this has their updated discounted free cash flows because, as I noted in my Denison video, I realized this entire time, with the exception of Denison and Fission, I was only using 50% OPEX inflation, not 50% CAPEX inflation. But I have it properly this time. I have 50% both CAPEX and OPEX inflation, and same thing with that 10% discount rate. This DCF here also uses $80 spot price, and if applicable, we use additional cash flows, for example, Global Atomic Zinc plants. So we see the best one still looks like Fission Uranium, with 120% upside from here, with 99% upside for Denison, 41% upside for Forsys Metals, and 27% upside with Global Atomic. Now, GoviEx, UEC, and UEX really falter here, but that is not entirely fair, since for UEC and UEX, they use the strategy of dozens of small, cheap ISR deposits, and for each of these companies, they only have like 1 or 2 PEAs completed, with like a dozen or 2 deposits to each of them. So of course that's not fair to them. And then when we look at a company like GoviEx, it's gone up over 100% since I make the video on it. So of course the difference is going to be a lot worse here. Plus again, because these are conservative numbers, you could easily do this with only 50% OPEX inflation and the will still show that there is significant upside in GoviEx. I just want to only be looking at the best of the best by doing 50% CAPEX and OPEX inflation. So there's lots of other factors beyond the DCF that makes these better looking companies look worse, such as Denison and Fission. And then there's a lot of companies that look really bad here, but beyond their DCF, there's a lot of things that actually make them look pretty good, such as UEX and GoviEx. But of course, do watch the individual video for each of these for further information on them. So let's get down to the total score, just comparing the price per pound and that DCF. First place, we have Forsys Metals, followed by GoviEx and Fission in a tie for second place, then Global Atomic, Denison, UEX, and UEC. These two did tie, but Fission significantly outperformed GoviEx with the DCF, and GoviEx significantly outperformed in the price per pound. So in this case, if you think, because obviously as 50% capex and OPEX inflation is unreasonable, you might prefer GoviEx a little bit to Fission because that price per pound, or it could be flipped around. That's completely up to you. Either way, this is not financial advice. I hope you enjoyed this very quick little update. Next week, I will be starting to look at some Australian uranium companies. So again, subscribe if you'd be interested in that. Thanks for watching, and I will see you next time.